Hello, this is Compound Interest Stock Guy. So in this video, we're going to be talking about a revised Canna-Berkshire-Hathaway portfolio. I did the original Canna-Berkshire-Hathaway portfolio created by myself. It's something that's super sauce. It's information the companies are doing right now. So, I'm not saying to buy or sell right now. They can go a little bit lower for sure, but I expect because it's a presidential election cycle that these companies should do very well going into the election. So stay tuned, and don't buy or sell because I talk about this. Buy or sell after you did your own research, due diligence, or you've spoken with a financial advisor. So what percentage, I'm going to say the companies, and then I'll say which percentage. So based on this, so say you had $10,000, right? You would put 1% of that money, which would be $100 into that stock. If you had $100,000 and it was 1%, you'd put $1,000, right? So these are the recommendations, and this is what I feel in my heart. So let's get into this. So ACB, 1% of the portfolio. And it's a little bit of a wild ride with ACB, but they do have a lot of IP, and they grow a lot, so who knows where they'll be in the future. I don't want to take them off the list. I mean, you could definitely put a higher weighting on them, but there's a lot of risk with that reverse split and future dilution. So now next one is Cresco-Labs, and that would be 1% of the whole portfolio, and the ticker is CL. And then the next one is Village Farms, VFF in America, and Canada, VFF. So, I think they're doing a lot of good things. They're kind of their sales have kind of gone down, just like they don't hit the list on the cannabis ranking, and so I got to take them percentage points down from what I previously had before they were like a rock star as far as their financials, but it's kind of been a little bit less, but I still think they have a great future. The next one is Tilt Holdings, TILT, and I think it's SVVTF, something like that in America, and that I would put 1.5% because 46 million in sales in USD. Then you do the conversion to Canada. I mean, that's close to Aurora's sales, and they're about like under 100 million market cap. So Tilt Holdings for sure. I think they'll be around with their cartridges and their technology. So the next one would be Tilray, so TLRY, and I'll give them a 2.5% weighting. They're a little bit riskier as well. Same kind of scenario with Aurora, but they're connected with the big companies, so I think they're going to be around for a long time. They got deals with Anheuser-Busch and Novartis, NVS, and Anheuser-Busch BUD. So those are big S&P 500 companies. So yeah. And then below that on the list, which has a higher rating, is GRWG, Grow Generations, at a 3% weighting. And they're doing about 33 million a quarter. They're about like neutral for adjusted operational income, but I mean they're big in the hydroponic space, and they're also on the NASDAQ. So I think that's a company you want to have, especially in the Berkshire Hathaway portfolio with the biggest and the baddest. So that's what's up. Now moving along, CGC, or Weed in Canada, Canopy Growth, and I give them a 3% weighting. I mean, there's definitely an argument that they could have a higher weighting, but their financials aren't super impressive, so I can't really give them that weighting yet. Now moving along, going to Aphria, APHA, and I give them a 4% weighting. And that's pretty much what's up. I think they're doing a good job with their distribution, and they're a pretty big player across Canada. And I think they're great. So I'll give them 4% weighting. They have a pretty good cash position too, so I like that about them. Now next is CURA-LEAF, CURA, and I give them a 4% weighting, and I think their financials are pretty stellar. I mean, they have pretty good cash position. I mean, they do losses, but they do adjusted EBITDA positive. So yeah, they're definitely one of the top dogs in USA. So I mean, I gotta put them on the list. Now moving along to GW Pharma, GWPH, and I give them a 4% weighting because, you know, they got some amazing profit margins and the sales are getting pretty big. 109 million a quarter. Now moving along, GTII, I give them a 5% weighting, 102 million, and you know, nice EBITDA, 25 million. I mean, that's a pretty nice stellar way they're moving along, and they're becoming a big bad player. So I got to give them 4%, 5%, I mean. And then next on the list is IPR, and they get some nice net income at 5% weighting for this portfolio. And yeah, I mean, they've done a pretty good job. You know, it's a $75-$80 stock, but there's very low amount of shares. So I mean, looking at the big scheme of things, I mean, in 5 years, I mean, this could be like a $500,000 stock. So yeah. Then next on the list is Cresco-Labs, LABS in Canada, and I put them at 6% weighting. Them and Valens are the biggest and the baddest extraction cannabis companies in all of Canada. So, you know, I got to pay respect. I do have position with them, as well as, you know, some others on the list so far. And yeah, Labs, 6%. Moving along, Valens, VLNS, and I give them a 7% weighting at Valens company. You know, they're doing beverages now, they're doing extraction, and yeah, they're in Shoppers Drug Mart. I mean, they're same with Cresco-Labs. They're also in Shoppers Drug Mart. So I mean, that's pretty impressive, and they're doing good sales, like in the 30s to 40 million a quarter, both these companies. So moving along, we're going to give Kronos. They got a great cash position, and I'm going to give them a 7% weighting. You know, they have like 1.5 billion in cash the last I checked, I believe, and or maybe it's like 1.3 billion. But I mean, they got months and months left before they'd have to dilute or anything like that, and Altria is backing them, so give them a 7% weighting. Now I'm going to give the number one weighting, I'm going to give to CURA-LEAF, TRUL, at 10% weighting, and TCNNF. And yeah, that's really, you know, they're beast in Florida, and they're also in Massachusetts and in Cali. You know, they're set to do 100 million a quarter very soon, and very nice profit margins that company does. So that is the raw truth about the biggest and the baddest companies. Now that's weighted towards 65% in total calculation. So that's if you put based on everything, the weighted, say you had $100,000 and you put $1,000 for a 1% weighting, you'd still have $35,000 left. And that is by design. You'd want to have $35,000 in cash. And that's you know, it's a strategic way that when companies get lower or companies become profitable, then you can add other companies to the list. But I always would want to maintain a 15 to 25% minimum cash position in the portfolio so that I can buy companies when they're lower. So that is the design of the Warren Buffett cannabis portfolio, Berkshire Hathaway portfolio, Berkshire cannabis portfolio. So thanks for watching. Thanks for listening. Hit that like, boom, boom, boom. Let's get this to 50, 100, 200 likes. I mean, let's see. I think I deserve a lot more followers and viewers. Cream, vanilla, you know, the best information in the whole cannabis industry, and you know, just coming very in a concise 10-minute video. So leave a comment down below, share the video with friends and family, and until next time, as well, subscribe if you haven't subscribed. And until next time, shaka, peace, I'm out.